Hi, everyone. How's everyone doing? Hi, Kevin, Brock, Ren, Sinatra. Okay. Everyone doing okay? Morning, Rahul. So the turnaround Tuesday call worked out on the short S&P. There were some people worried about me. It was at 390.20 yesterday during face. Worst drawdown. Hi, Abel. Hi, Mark. About 4-handle drawdown, and then broke about 20 handles before it recovered. Anyone catch it? Hi, Monica. So, if you don't make money, and that's the important part of partials, right? If you didn't take anything down on this break, you gave it all back. If you do that, you need to shut down your trading platform. If you have a lead like this in S&Ps and you don't make money, there's something wrong with your money management skills, and I would say you're not taking partials. So here we are again. We made new highs. Today is that Bradley date. Who is Brad anyway? Anyone know Bradley? Anyway, today's the Bradley date, and trying it again up here at this 95.20 level, risking 25 handles. You can see at new highs, still glaring divergence. I would say if we take out yesterday's low, there's going to be some downside in the S&Ps. And, this is interesting, and it's a teaching experience. So early in the week, I talked about us. No, I don't think he's alive. Talked about the double top being taken out. I thought it might just be a stop hunt. And then after it took it out, it was, maybe here. The point I made is don't sell it until you see a candle close underneath this blue line. You see how important it is? Maybe you could see it clearer here. Look at this. So pulled right back and then came up like a beach ball that you pushed underwater. So what do we know going forward now, the way this held? What are your thoughts? What do we know after yesterday's action? That'll tell us what to do going forward? Any guesses out there? Come on, it's 5 in the morning here and I'm awake. Yeah, until you get confirmation. But what we know now is 34.50 you're looking for. All right, we'll see. That could happen. No, what you know now is if we take this low out now, there's problems. Yeah, there's problems if we take out this low now back under the line. So what we learned was this line was significant because of the reaction we got off of it. So if we would close back under it, I would say that'd be a pretty negative signal, negative action, right? You guys all with me on that? Okay. And okay. So I'm not long, I'm not short the dollar. I mean, there's no reason to do, anything on the long side. We're approaching some fibs at 91.40. I'm hearing a lot of people talk about it. So it's an I don't know for me. And gold, though, is interesting up here. I didn't do the fibs, but I would suspect this may have been about 61.8 back. I don't think it's 78.6 back, but we could be rolling over here. Of course, we're going to need some type of bounce in the yen, and the yen's trying to dig its heels in here right at the 61.8 level, which it took out on the way down before it turned, and now it's holding it. So I know Greg had turned negative on this, but maybe we could get a pop from here. Greg yesterday when he stopped by was talking about 103, which is down here. Okay. And if that happens, I would guess that gold probably has a new high in it if this happens here. Crude with the S&P making new all-time highs, so it does this to me once in a while. It's still doing so. I can't look at crude. All right. Why don't I wrap it with CAD? Okay, because this is pretty interesting. So we have this breakdown here, but you see how we're diverging right under the breakdown, and this line kind of made sense. We are getting some reactions off this line around 31.75. And at new lows here on the 2-hour, we're diverging, which we weren't doing here, right? And we are doing now. Let's look at the 4. Yeah, 4 is above 30. Look at the 15-minute. 15-minute held 30. So I'm alert for, back over 75. This line is going to be a false breakdown to me in USD CAD. And I think that's going to be the July high too. Yeah, it was also a double top. Thank you, Amira. So we'll see, but be alert. I think I saw the dollar index under 10 on the DSI, or at 10. I can't buy the euro up here and I can't sell it, but you look at the 15-minute is confirmed. The only negative thing I could say about this is the daily was not diverging up here at the double top, but here it is. So I asked myself, would I short it? One reason I might be considering dollar pop is if I'm right about stock indexes that maybe we'll get a bid in the dollar. So I believe we have Andre with us today. You can get some looks at some great harmonics.
Hey, good morning, Coach. He may not be joining. I'm not sure yet. So.
Oh, okay. And you're waiting for your groceries.
I am, yeah.
So Stell has a big trade on this morning to fill up his refrigerator.
Yeah, we've stopped going to the supermarket physically. It's all delivered now.
Yeah, I do that too, Stell.
Yeah.
Do you pay premium? Like, all the different surcharges and everything. I think it's worth it,
It's free delivery, believe it or not.
Oh, yeah. You using Amazon? They don't have
No, it's a local market.
All right. Anyway, okay. What did you order? No, I'm kidding. Anyway, so I'm on breakfast. Anyway, so I'm attempting the S&P again today, and here's NASDAQ. On multiple time frames. It's kind of surprising. It is diverging there, but it's one of the only time frames. The 4-hour got over 70. The 2-hour blew through it. But we'll see. I just think we're due. And, I remember what Mark Newton was saying mid-August, some of his cycles turned negative. And then, Norm was there. He didn't hit it on that retrograde. Yet NASDAQ's still leading. Yes, that's correct. So we'll see what happens. The key to this business is you probe and see what happens with your ideas. But while you're probing, you're also protecting. Okay, so you probe and protect, and let this be a lesson if you didn't do it yesterday on the Turnaround Tuesday call. Please learn how to take partial profits, okay, where you take half off when you say you have 10 handles and then move your stop down to BE so that you get paid when you have a lead. It's tough enough to get paid without letting it go. You have to learn to ring the register. You don't have to get out of the whole position. Instead of doing, 5 minis, you could do micros so that you could put something on, take something off without being all in, all out. Okay. You haven't seen nothing yet, Hanya, if you join ForexAnalytix, you'll be amazed with everything that we offer on the website, let alone a great community in members chat. Plus you have guys like Paulie that's going to help you before face opens. And then you have Blake mid-session to update what we're talking about here and in the room. So if you like the team, give yourself more exposure to the team than just this hour here before the interviews. And we have Raksha with us today, so we'll see what her crystal ball is saying, which she is named Boomi. And that's all I have to say for now. Good luck today, and I'm gonna turn it over to Blake now and see what he's thinking, and he's going to take you through the charts. So, good morning, Blake. How are you today?
Hey, good morning, Coach.
How are you, buddy?
You know, today is my son's 16th birthday. My oldest son.
Happy birthday!
Yeah.
Thanks. It's
Wow. You have his driver's license now?
You know, he's got his learner's permit, but he has to we have to make an appointment for him to go pick it up. And it's, you know, the DMV or the, you know, Department of Motor Vehicles is
all screwed up because of this.
It's all screwed up because of the pandemic.
Yeah.
You can't just go in, you have to make an appointment, then you call them and you can't even schedule an appointment. That's a scary thing. So it's like, I have been teaching him how to drive though.
Anyway, that was a big event for me when I was 16.
Oh yeah. It's a big event for every 16-year-old, especially
freedom.
Yeah, it's freedom. You know, people like myself, Stelios, I know for sure. Steve, we love to drive. You know, fast cars, and you know. But my oldest son, who's turning 16 today, or turned 16 today, he is more of the driver. My 13-year-old's more of the Uber rider. Yeah. He's content with not driving. The older one, really, you know. That's exciting. Yeah.
Well, happy birthday to him.
Thank you. Yeah, it'll be. It's going to be it's interesting having birthdays during this this time. But anyway.
Yeah.
Other than that, so we're getting ready today for, you know, to see if we're going to break out or not. I mean, this is really what it comes down to, right? It's are we going to break into new all-time highs today, or are we not? And the event that I want to say the market's waiting for, but is it really waiting for, is the FOMC meeting minutes. You know, I can't imagine the minutes are going to be what's going to move the needle today, but that doesn't mean that won't be the catalyst that, you know, just you know, is the straw that breaks the camel's back, that actually gets us over the hump, you know, that makes the market break out and finally break out. You know, it doesn't necessarily have to be an event that pushes everybody in, but you know, maybe it's one that, you know, starts the you know, the ball rolling, if you will. So you know, and I'll just talk about it really quick, and I'll put it actually on the bias chart. If you're watching the S&P, you know, which everybody should be. I'm gonna get rid of some of this stuff. Matter of fact, I'm just gonna keep that there, and we'll just keep those lines there. As you guys can see, we're nudged up against the highs, and we're just wedging. I mean, I'm gonna actually get rid of these intraday lines because I don't think they're so important right now. Oh, did I just delete? I just deleted. Oh man, hold on. What did I just delete? 200. Yeah, no, it's all there. Okay, never mind. I thought I just deleted something, which I probably did, but that's okay. Anyway, what you'll notice here is we're just, like I said, nudged right up against the highs, and you know, the question that we're all waiting for right now is, are we going to break out, or are we going to, you know, put in some sort of, some sort of double top or something like that. And here's something that I want to throw out at you. And this is the thing that probably concerned me the most yesterday. What happened yesterday that was a big deal? Stelios, Dale, do you guys know what happened yesterday that was a big deal? Anybody? Let's just call it market wise. It not necessarily. It wasn't a big news event. It wasn't a big, like
the breakdown in Canada.
Well, how about a breakdown in the dollar?
Oh, okay, yeah, all right.
Yeah. So here's the dollar index, right? We hit new lows. We broke into new trend lows. So if the dollar is breaking into new lows, why didn't that propel the equity markets into new highs? And that,
remember, I was bringing that up yesterday after they tripped all those Euro stops. I said, the stock indexes weren't really responding.
Yeah, and they didn't all day. I thought at some point throughout the day, I mean, I sat there and waited all day yesterday. I'm like, and matter of fact, the dollar Canadian actually was firming up. The dollar Mexican peso was firming up, and I'm like, whoa, this isn't supposed to be happening right now. We're, as equity markets are, as the dollar's breaking down, we should have equities breaking out. So that wasn't happening, and so that is a little nerve-wracking if you're long equities, because it's like, okay, why didn't, as we're waiting for a catalyst, why didn't a weaker dollar at least get us to new highs, or and it didn't. So anyway, that's something to note. Also, I'm gonna put this out here for the S&P, just because we're gonna have to write down both of these numbers as we normally do on the bias chart anyway. 3,400 is a big deal. That spike high there, that was a bad print. So just, I should actually be using this chart. It's better. Here, let's for now, because it doesn't have that bad print in there. So let's go and let me just do this work for you guys. This is the June move, right? High to low, extension, 161% extension, 34.25. So I actually thought it was 34.20, which I think it's probably 34.21, but that's all right. We'll just write down 34.20. It doesn't really matter, because we just need to know it's up there. So the S&P obviously is bullish. We have 3,400, which everybody's looking at, right? And then after that, we have 34.20, which I think we need to pay attention to. And the reason why I want to be really cognizant of this is because what if, and I'm giving you the what if situations. And by the way, stocks, I think they're rolling over a little bit here. I mean, the NASDAQ's actually trading at the lows of the session. That doesn't mean anything, because every time you look at the market and you go, oh, look, the market's trading heavy, then as soon as you think it bounces. So it doesn't really matter. It's not like it's everything's breaking down and we're accelerating. Well, and one of the things that I was actually having a conversation with Steve the other day, who's on vacation, obviously. Steve, who's normally here. Steve Vulgaris. Did I say that right, Stel?
Vulgaris, but
you
said conversation. So basically, he was speaking 59 minutes and you were speaking one.
Yes, exactly. I didn't utter a word. No, we were having a conversation about something ForexAnalytix company related, and we were just talking about the markets, and I'm like, man, the insatiable bid in the market is just crazy, and I'm like, there's no downticks, and we were just talking about it, and really we both came to the same consensus. It's when the market turns lower, it's going to turn lower, and it's really going to turn lower, and you're going to go, it's just selling off a little bit, and then it's going to keep selling off, and it's going to keep selling off, and then you're going to, at some point, everybody's going to look around and go, wow, we're down 5%, and this market's really, really selling off, and it's not going to let you in, because the sell-off is just going to be abrupt, and it's going to be quick, and it's going to catch everybody off guard. No one's going to believe it. And, so because everybody's coming up with the same attitude like I am right now. Oh, look, the stock market's selling off a little bit. It'll bounce back. You know what I mean? Like, I'm not getting excited about that. And what will end up happening is you know, we won't get excited about, it'll be one move where it's going to look like this, but then it's going to just, you know, keep selling off, and we're going to go, what the hell just happened? And no one will know. You know what I mean? That's probably what'll happen at some point. Not saying that this is the moment,
yeah,
but
I think the market's been conditioned to know that dips are bought. End of story.
Yeah.
That's why I think in March we saw the move as abrupt as it was.
Yeah,
there were a lot
exactly.
of buyers. Yeah.
Exactly, because everybody's you know, pre-programmed to buy the dip. You know, just buy the dip, you'll be fine. You know, just whatever dip you see, just buy it, and you're going to be okay. And I think that's really the reason why we are at risk of a little bit bigger move sometime in the, you know, sometime whenever that is. It's going to catch us all off guard. It's not like I can try to predict that. But let's figure out what support is for today. I mean, support, you know, obviously right now, and I have to stay, even when we, you know, the other day when we tried to make a stab below the support, it didn't last. So what we have to do is just take the last known pretty solid low, which I would say is this one. Okay. And if you want to just, you know, get a little anal with me, you can just say, well, how about this one? We could mark down two. It doesn't really matter. You know, I doubt we see them. So 33.55 and 33.28. So, or, you know, we can always write down 3,300. So 33.25 and 33.55. I mean, I mean, we're just bullish. Again, chances of us testing these support levels at this point in time, it just doesn't seem like it. But, you know, one day we will. And when we do, it's, you know, have to be aware of it. And let's go through the bias chart. And by the way, Stelios, do we have any data coming out here this morning?
We have Canadian data in 8 minutes.
Okay. Well, we'll take a look at the Canadian beforehand. I'll get the analysis done for the Canadian beforehand. So let's go over to the euro. So the euro, as you guys know, we broke out yesterday, and you know, we broke out above that 119.10. So 119.10. Whoops, that is support now. Sorry, one. And as long as we're above, you know, basically 119, you know, we got to remain bullish. So resistance would be the 127% extension of this last move lower. So that comes in at 1975. 1975. Okay, cable. So the pound, actually, I'm surprised the pound hasn't followed through today. I've actually, when I got up this morning and we were trading in the 20s, I'm like, huh. But we're still holding 131.85. So, you know, that's important. 131.85. Remember, this is a multi-year trend line, so that support has to hold. I'm long a little cable, and you know, when I got up this morning, I'm like, oh, I'm surprised that's not stronger, you know, and it's just, you know, kind of meandering around. Anyway, one of the reasons why I know this is going to be a problem, and I mean, if you use ForexAnalytix and you got the analysis yesterday, okay, you know, it doesn't matter if you're using the premium or the light version. Okay, what's most important is that the cable finally broke the 132 level and the multi-year trend line, stalling at the long-term 618 retracement of the last 2-year move. So this is the problem that the cable is having right at this moment. If you look at from the highs of 2018 to the low, we're at the 618 retracement. It comes in at, you know, I mean, it depends on how what data feed you're using, but it comes in roughly around, hold on really quick. It comes in roughly around the 132.50 level, roughly. And like I said, it really depends on It depends on where your fib levels are drawn from, but the point of the matter is that it's key. So 132.67 is going to be the overnight highs. So we need to write 132.67 and put an asterisk, because it's here where we're at is big resistance. Okay, and that we have to be aware of.
Like, I think it's worth mentioning that we had the CPI of the UK today came in stronger than expected at 1% year on year versus 0.6%.
Well, it looks like, and why isn't the cable carrying?
Well, that's a question. You know, even with strong data like that, you know, I know people say data doesn't matter, but you know, inflation is something important for central banks.
It will, and it's going to be, I would assume, probably relatively soon, right?
Like one of our attendees is asking, what does the asterisk mean? Does that mean very important?
Yeah, the asterisk means it's very important. And look, and I'm glad one of our attendees asked this question, and I'm gonna go ahead and stop here for a moment and talk to you guys what all this means. When you're doing a bias chart, it's important to know what key levels are in front of you, above and below where your current levels are. It's also important to know your bias, because if I know that like the cable's bullish because it's breaking out to the upside and, you know, there's dollar weakness everywhere, blah, 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 whatever the, you know, whatever my reasoning for being bullish or bearish is, I know it's bullish. So that doesn't necessarily mean that I have to be long the cable. I could actually be sitting here today going, okay, I'm going to short the pound. But if I'm going to short the cable or the pound dollar, I know that it's in a bullish trend, so therefore I just need to take smaller positions. When we start getting close to a level that has an asterisk, I know it's very important. So therefore I want to be a little bit more careful with, you know, with the pair as we're nearing that key support or resistance. If I just put in like a, you know, just a number, then I think it's just a number. But if, you know, it's like just something we need to pay attention to. But if I put an asterisk, then I know then we all know it's really, really important. Okay. Hope that helps. And I'm glad that you asked. So let's go over to the Canadian really quick. Let me just do this. So the Canadian, we're in this, you know, downsloping channel. We're actually below, for now, the big trend lines that we've crossed through them. That I'm more concerned with these trend lines by the end of the week versus today, you know, because it is you know, these are long-term, you know, you can see them here. These are big long-term trend lines that are coming into play on a weekly basis. So I'm not so concerned with them on an intraday basis. So what I'm paying attention to right now is we're getting towards the bottom end of our channel, 161% extension. That comes in at 131.31. So 131.31, 131.31, 131.30. That's 161% extension. Below that, you know, maybe around 131.15 is channel support. Okay. And then resistance, you know, this looks like a, you know, a wedge right now. I really would like to see the pair, since we struggled yesterday at 132. I'd like to see it get above 132. And you know what? Until we start getting back above 132, I'm going to have to put it on bearish. And I know I've had it on range bound for you know what? We're going to have to figure out this week first. I'm going to keep it on range just because we're near so many key support levels. I don't want anybody to be looking at it saying, oh, we should be really bearish here, because I mean, we are on a lot of weekly trend lines. So we do have some Canadian data, right, Stel?
Yes, that is correct. We have CPI and wholesale sales, but really CPI is the big one.
Yeah. So here, let's see what that data is. And here's Bloomberg, just so you guys can see the difference between data flash you get with ForexAnalytix. Bloomberg costs you $2,800 a month. It depends on what you get. It's anywhere from $2,000 to $3,000 a month. So yeah. So anyway, you can see the data here, and sometimes data flash comes out quicker than what you see here on Bloomberg, which is crazy.
Let's see. Oh, they
Their
came in
wholesale
together.
sales came in quicker
Yeah.
Now the CPI data came in. Maybe I need to refresh my browser. Did yours come out?
No.
Okay,
So there you go. There are some times when it's not.
yeah, so it actually, but the wholesale sales came in faster than expected. Yeah. That is better than expected. The dollar Canadian actually is moving higher as CPI came in a little worse than expected all the way around. You know, year over year, core CPI came in worse. You can see, you know, all the, you know, the trimmed, you know, which is basically the core. So data came in a little weaker. And the dollar Canadian is firming up just a bit, but not a lot. You know, but what I'm going to be looking for really today is if the dollar Canadian gets back above 132, I think that's kind of that's a bullish development all in all. But as you can see, the Canadian is just kind of, you know, just dwindling lower currently. All right, let's get through the rest of this analysis. Let's go over to the Aussie. This way I can allow Steve or Stelios to actually say something today. So here's the Aussie, hit the 127% extension of the last range, and that came in at 72.78. That was actually the high overnight, was 72.75. So we're going to have to 72.75. But the Aussie, the dips were very well supported overnight. And the dips yesterday down to 72.30, this little breakout point, if you will. So I think that is pretty key support today. It's going to be 72.30. Okay.
Like, if I may interrupt for 1 second, one of our friends is saying, what does worse CPI mean? Basically, it's lower than expected. So CPI year on year was expected 0.5%. So it came in at 0.1.
Do you want to explain why lower CPI is more bearish, or why it be construed as more bearish for a currency?
Well, the thing is, you know, if you have, let me put it this way, FX pairs, they're a construct of forward rates. So basically, and forward interest rates. So if inflation is lower, then the central bank is not going to hike rates. They're probably going to cut rates to bring inflation back in line. So when you cut rates, you make your currency less valuable, because it will give you less yield, less return, however you want to call it. It's a different thing if you know, base rate is 2% and base rate is 0% or negative. You know, you have cash in a negative environment, it costs you money to have the cash. If you have 2%, you get something in return. So lower rates means weaker currency, and lower CPI drives rates lower. That's as a general summary.
Well, they're very good. Very good. So thank you, Stelios. All right. So, you know, I was just, and thanks for that explanation, by the way, and I hope that helps you out. In the meantime, what I was doing is I was just pulling up the Kiwi, and I was just, for anybody that was following along just with the analysis that I was doing without saying anything, is first of all, with the Kiwi, one of the key components of the Kiwi is if you look at the weekly chart, see that trend line? You notice we bounced from 65 cents this week. Right, we got, well, we came close. We came to 65.15 roughly, and then we bounced. So my opinion is we're up against pretty key resistance today. It's a trend line resistance right up against the 618 basically. This 66.50 should cap the Kiwi today, but if the dollar continues to weaken, you know, we continue to see a weaker, hold on real quick, guys.
Our friend is actually saying worse for whom in terms of inflation, because it's not a good thing, right? When things are appreciating in value and your purchasing power gets decreased by inflation, but that's a very different conversation. So yeah, I get you. I get your question.
Yeah. I mean, it may be better for the consumer, right? But it's worse for the you know, higher inflation is also something that, you know, central banks know that you need a certain amount of inflation for growth, right, Stelios?
Yeah.
And so that's why all central banks always try to target inflation to a certain extent, because they want to keep the wheels moving, you know, so to speak. But for the consumer, actually, you know, you don't really necessarily want inflation, right?
Well, you want your earnings to be rising at least as fast as inflation. That's what you.
Yeah, right. There you go. Okay, sorry. I'm gonna get back to the analysis here. So we're up against the 618, but that doesn't mean we can't go higher, because if the dollar continues to weaken, like you see against the hold on really fast. You continue to see against the euro and the cable, then the Kiwi might actually rise towards 67 cents again. So, and the 67.15, it's actually been doing fairly well. So I'm gonna today anyway, 67.15, and then support. I think support on dips, you can see these few spike highs up here, spike low. That's going to come in around 65.75. If we get down there today, that should probably support us, I would say. And since we're above 65 cents, we'll just have to keep it bullish now. Dollar Swiss. So the dollar Swiss, surprisingly, now this is something that you guys need to pay attention to. We were breaking down yesterday. I actually, I shorted the dollar Swiss yesterday. I shorted it like when it was breaking down at 90.33, 90.35 actually is, I think, if my memory serves me correctly. And I made like 7 or 8 pips shorting it. Nothing big, nothing to write home about, just as it was going down here. And by the end of the day, I'm like, wow, I'm glad I got out of that because it didn't really move anywhere. But what we're seeing right now is a big squeeze. And this could really be, you know, some central bank activity with, you know, the Swiss National Bank wanting to weaken the Swiss, which you'll see it in the Euro Swiss is probably, you know, this seems like central bank activity. So the problem is it screws up the dollar Swiss. And if you were on the short side, then you're looking around going, oh, geez, now you got a false breakdown. So technically, you know, and that was after hitting the 127% extension, which comes in at 90.10. Okay, so 90.10. Now, I do think it's still bearish, you know, and you guys know, while we're below 92.40, we're bearish, but it doesn't mean the squeeze can't take us a little higher, and maybe back to the 618 here, and that which is just previous support, which will be at 91.06. So I'm going to write down 91 cents. Okay. So there you go. Let's take a look at the dollar yen. Dollar yen. So this was this my chart of the day yesterday? I can't remember. I was out running. I had to run some errands yesterday. So I remember I was doing things kind of, I can't remember exactly, but the dollar yen has been, and I think we're in a descending channel here. Any rally up to 106, like you can see how we're like, if this channel is correct, see how we're mid-range. You guys know I don't want to be short anywhere below 105 really. That's where all the, you know, you can go back and just see every time you try to dip down in these levels, it squeezes. So especially below 104, 104.50. So and if we're truly in this descending channel, we're exactly mid-range. So you know, what do you do with the dollar yen here? My opinion is you don't do anything with it, but that doesn't mean that some of you won't trade it. So probably any rally to 106, and support should be at 104.80. So I'm just going to write that down. 1.048. Oops. 104.080 and 106. And I'm going to keep it as a range. It's probably just better to leave that one alone. Here's the dollar index. So dollar index continues to stay heavy. Okay. 92.10 is the 127% extension, but while we're below 92.50, it's bearish. So
The DSI at 9 for the dollar.
Yes. Thank you for bringing that up. So 92.10. And you're exactly right, Stelios. The DSI, the Daily Sentiment Index, is at 9. You want to explain to folks what that means?
Yeah, the DSI is something.
And let me just add really quick. And by the way, that is a subscription that we subscribe to at ForexAnalytix, and we share that information when it gets to extremes with our traders. So, go ahead.
Yeah. So the DSI is basically an index which is compiled by a certain company, and it's subscription based, and it shows the sentiment in various instruments, currencies and stocks, gold and oil and all that, and 0 to 100, and 100 being very bullish and 0 being very bearish. I've never seen 100 or 0, but really anything in single digits or above 90 is extreme, and the euro is at 92. So, euro dollar is really, really stretched at the moment, I think.
It really is, yeah. And the dollar index is very stretched as well. So need to be very cognizant of that. And thanks for bringing that up today. Okay.
Probably been many years that we've seen those readings in the dollar and euro.
Yeah. Yeah.
Many years.
Yeah. And you usually don't see those extremes. Once you start getting in the 90s, like the euro is 92, it could go to 93 or 94 today if the euro continues to hold on to its bid. But it gets kind of rare, and it gets you get to the high risk of reversal.
Could I ask you for a quick look that's not on your bias chart, or are you in a hurry?
Can I finish up the bias chart really quick?
Sure.
Yeah, let me just do that really fast. So the dollar Mexican peso, we're just coming back to this broken trend line. I would say that the 2202 is support, 2225 is resistance. I'm just going to do this really quick. 2202, 2225. That needs to be broken for it to get any kind of move. This is going to be the same, the US dollar Norwegian krona, which is 8.0 or 8.81. I should actually look at the charts, but it's all the same crap. We're just not doing anything. Here, US dollar Norwegian krona. Actually 881, we dropped to 880. That might have been just a real quick stop run below the 161% extension. Actually, resistance now is at 895, so 880. Let me make that adjustment. 880, and this will be 895. 895. Okay. Oops. And then gold. Dale, you might remember yesterday we wrote down. Did we write down? Let me see really quick.
2000, I think.
I have it from yesterday. Hold on. Yesterday.
Yeah, 2015.
2015. Do you know what the high was yesterday?
2015.
Yeah, I mean, it was, and that's before we got to 2015. And if you guys didn't know why we wrote that number down,
Was it a fib?
Nope, it was previous support, actually.
Oh, okay.
So, where the hell? Oh, there it is. Okay. Previous support acted as current resistance. I mean, we just, we came up with that. It was textbook. So, yeah, to a T. So, today, I mean, look, we get a dip down to probably 1960, 2015 again. I mean, I'm bullish, but I'm bullish because it's a very bullish trend. You know what I mean? So let's go 1960, 2015. But I think it's more of a range intraday. I think you can play both sides of it now. Okay, so you were going to ask me to bring up something.
Yeah, it's been a monster, but it looks like it may have peaked. Aussie, Kiwi.
Oh yeah. Actually, as long as we stay above 109, you might want to be buying a dip here. But yeah, what we did is we did a shooting star yesterday. If you guys missed it, as a shooting star,
Yeah.
ForexAnalytix candlestick analysis.
Okay.
Was.
Thank you.
Where is my?
Oh yeah, all I had to do was go there instead of asking you, and
Yeah,
go
I
under
mean,
BT.
Yeah, why are you asking me?
I don't know. You're
Where's my Aussie
BT
New
on the
Zealand?
site because I want everyone else to know that's not a subscriber.
Okay.
I just made
Got
that
it.
up.
Oh,
I
here it
really
is.
don't
Okay.
care.
So candlestick analysis, you can see it was red yesterday.
Yeah.
Shooting star, shooting star may signal reversal. We got a reversal, but I think dips back to 109 are going to be pretty well supported.
Okay. Thank you, buddy.
Yeah. So anyway, let's. I want to bring in Stelios really quick because
Yes.
I've been speaking and I'm done speaking.
No problem.
I wanted to give you an opportunity to what's happening today. I know I did all the speaking today and I didn't mean to, but I wanted to get this out of the way. And
No,
anyway.
that's good. That's fine. I'm not Steve, remember? So we talk about a couple of
Yes,
things.
you are.
We had UK CPI coming stronger, Eurozone CPI exactly in line at 0.4%. I mean, the main thing is the FOMC later today. In terms of what's happened overnight, couple of little things. I mean, more of the same. Donald Trump is basically calling off, he called off last weekend's negotiations, however you want to call it, the Chinese. Remember, this was supposed to be a review of the phase one deal that came into force 6 months ago, and they were supposed to review how it's going. That's now off. And Trump actually said, I don't want to speak to the Chinese right now. So we've been talking about this phase one deal and how behind they have been on pretty much every aspect. The Chinese are supposed to be buying a shed load of stuff from agriculture and all sorts of stuff from the US, and they have been doing, I don't know, less than 10% of that. So they were behind. They're supposed to review. It's not happening. And also we need to remember the stock market when it was rallying on hope that there's going to be a deal in phase one. And when phase one happened, we rallied even further. Well, all this has been undone now, at least for now. But obviously, the stock market doesn't care. So that's an interesting thing to just to keep in mind. How what's the word? How
complacent?
Complacent. That's the word. The market is. It's just it's crazy.
It
Anyway.
really is.
Yeah.
So, this reminds me, and just so you guys know, my history, when I started trading was in 1990. Well, I was already in the business. I was a stockbroker in 95. Now they call them wealth advisors or something. They don't call them stockbrokers anymore. But back then, I was a stockbroker, right? So when I got into trading was in 1996, and that was the birth of really the day trading era when there was traders called So's Bandits, and we would run our orders on the short order execution systems, and day trading was a thing. Let's just put it that way. We're back in that era right now. Day trading is a thing. You got all these Robin Hooders right now. It's the same thing, just 25 years later, because no one remembers but me, and obviously some people that have been around the markets for a few years, like Dale, and Dale's been around since the dinosaurs, and Stelios, you've been around, you remember. But joking, guys. But anyway, but the point being is that we're in that same type of era where it's kind of the Wild West of trading, and everybody's just buying because they don't know that there's just like, that's what they do. Everybody just thinks you buy and everything goes up. And that was the same thing with the same mania that we had with the tech stocks back in the 2000s, right?
Yeah, you know what they say. You will know when there's when a market's nearing its top when you go into a taxi and the taxi driver starts talking to you about it. And a perfect example was Bitcoin and cryptos in 2018. Everybody wanted to be in that, and I know they're back up now. But from 20,000 to go down to what was it, 3,500 or something? Did it go down there? I definitely went to 5. But anyway, that's a huge drop. And when you have everybody just going in because, hey, my neighbor is making loads of money on Robinhood, I'm going to do the same. That's when because retail is always the last to get into the party. That's when you might be close to a top. Now, yeah, go on.
And I was just going to say, Stelios, we are probably the timing of it all is obviously the tricky part. The thing that we just need to be aware of is that we are in that era, and we don't know how long it's going to last, but we know it's not going to end well. And so that's why we all have to be on the defensive at all times, not complacent. Yes. The opposite of complacent. That doesn't necessarily mean you have to sell every time you see a rally, you got to short, but we need to be on guard for, the potential and the risk of us turning lower at some point. But continue on, then I want to give you one thought about that.
Yeah, so. I was just going to say, a friend Jane is saying that Portnoy says stocks only go up. I actually agree with that because of inflation, but you have to try at least and time your entry as well as you can. I personally hate to get long into something which has already, or at least seems to me already overbought. And the other thing, which I think is very important when you're trading, you have to be comfortable with actually missing something. So basically, I've been saying, I think for people who've been in the chat room, on the big drop in March, I got long a little bit, obviously not long enough. I got out after a nice little run, and then I said, I think it was S&P was 29.50. I said, look, I think we're nearing a top now. I'm not going to touch equities. And I've missed this whole run. I don't care. I don't care. I don't mind. You got to be okay with missing some markets because, on the other hand, people who know and who have been following, I've been long silver, and that went up 50%. So I don't mind doing that.
He who said that stocks always go up. This, just so you guys know, this is the Nikkei, and I'm sure everybody thought the exact same thing back in the 80s with the Nikkei.
Yeah. 89 high.
And over 30 years.
And look, I'm not saying that we are Japan. A lot of people like to reference our charts to Japan's charts because I think there's so many differences with demographics and the manufacturing that Japan did even at that time. But that's not to say that price can't repeat itself in some way, shape, or form. But if you came in 89, which is, what is that, 30 years ago, and you came with that attitude like stocks always go up. Look, I'm right now, I'm almost 50. 30 years from now,
wow.
30 years from now, I'll be lucky if I'm still around, right? I mean, I'd love to live to 100, but let's just say
you will.
Let's just say I'm lucky enough to make it to 80, right? I might.
Oh, you're a healthy guy.
But let's just say we peak today. 30 years from today, you're talking 2050. And let's imagine that, we just go down to sideways for the next, and we are the next Japan. It's so I do believe stocks always will have a bid because of inflation, and there's always money being put into the market, but you never know, guys. You never know.
Can I say something about being comfortable missing something like Stelios said? Yeah. If you don't, Blake, don't you miss trades every day? Stel, don't you miss things every day? If you don't get comfortable and have a acceptance of that, you're going to need to be medicated. So here, take the pressure off yourself and write this down. I miss trades every day, and that's okay because there's always another.
Exactly. That's a good thing about being a trader. There's so many markets you can trade. For me personally, if something looks like the risk reward is bad, like I'm picking up pennies in front of the steamroller, I just won't touch it. End of story. If it goes, 50%, okay, so be it. I've missed it. But maybe that's just me. Maybe others want to get everything. I think it's impossible, but yeah, you can try.
It is.
I haven't looked at this volatility chart in a while,
Wow.
and I think it's worth looking at. I'm just kind of glancing around at charts.
Buy.
No, I don't know if you want to buy it here, but you can see that spike was kind of a little warning there. I think that we're in a descending wedge. For those of you that know me, that's my favorite chart pattern right there. So it's a key reversal pattern that's developing. Doesn't mean it will develop yet. We could have another leg.
There's a big gap underneath it, Blake, that was never filled at 18 if you go further back.
Yeah, I mean, we could
never filled it.
Yeah,
while the market's highs, we should have filled it. We didn't fill it. Anyway, just an observation.
Yeah. What we did do is come back and test previous resistance, though. Right? Yeah. So, anyway, it's something to keep your eye on, obviously. Stelios, what are your closing thoughts for today? And by the way, it's
closing thoughts.
Minutes, guys. It's not the FOMC. It's FOMC minutes today.
I just think, for me, I'm going to say what I've been saying for a while now.
You're buying silver?
I'm looking to buy lower. Yes, I still have a quarter position on, but I want to buy more at 21. But no, I think the key to these markets is to keep your risk reward ratio good. But I like to take trades which are 3-to-1, 4-to-1 risk reward. I'll miss a whole lot of trades, but that's just the way I trade. Also, I've brought down my sizing and leverage a lot. I mean, I already don't trade with much leverage anyway, but the sizing I do, I start trading quarters of what I used to trade, and then if something goes well, I'll add and so forth. So I just think you need to be extra careful because logic has gone out of the window, and correlations that you knew were working do not work anymore. And this actually reminds me a lot of what was happening in 2008 in the crash when I was market making in London. There were people who had been trading for 30 years and completely blew up because they were just not they couldn't adapt to what was happening. It was really brand new environment for them, and they just completely died. Not literally, obviously, but blew up, and that was that. And in that respect, it was actually an advantage to be relatively new to the market because you weren't you didn't have all these baked in thoughts that look, this works this way, end of story. You had to question everything.
You don't have any preconceived notions about the market. So really quick, and I got to say this, Dale, I'm really not good like Steve is. Like when I'm doing this webinar, I'm not good at like seeing the the listeners. You guys should all be clients of ForexAnalytix, by the way. But I don't read the Q&A or I'm bad at that. So if you can, and will go for tomorrow and Friday, while Steve is still on holiday. If you can just keep an eye on those, and I know you do. Just if there's anything that jumps out, like Blake, hey, can you address this? Make sure you get my attention.
Like the asterisks today.
What's that?
Like the person who wanted to know what the asterisk was.
Exactly. You do a great job at it. I just want to make sure you stay on it, and I wanted to make sure everybody knew that I don't read your comments. I'm not.
Yeah, he's not ignoring you.
I'm not ignoring you on purpose. I'm just trying to get through the analysis part of it, and I'm sure some of you can actually appreciate that I don't stop and answer every question while I'm trying to get through my school of thought to get the analysis out for you guys. And speaking of the analysis, here's the bias chart if you want to take a quick picture of it. And let me mention this before I turn it back over to Dale. If you guys are not a ForexAnalytix subscriber, try it. It's only $1 for 10 days. Download the mobile app, jump in the chat rooms with us. And if you want to try to get ForexAnalytix for free, open a Pepperstone trading account if you're not in the US and Canada. And if you are in the US and Canada, visit our webinar sponsors, Forest Park FX, because if you're not getting a cashback rebate on your trades, then you're doing something wrong. And you're in the United States and Canada and you're not getting paid when you trade, like back some of the spread, then I can't help you. So anyway, I'm going to leave you with that. Dale,
Thank you, Blake.
Stelios, Stel, thanks for all your explaining, your mansplaining everything.
You know, Stel, there's a request that I interview you. We'll have to do that.
That would be
Yeah, we could do
great,
that.
actually.
Yeah.
That would actually be really
How about
good.
Friday?
Friday,
around?
actually, we're leaving relatively early to go for a long
Okay.
weekend. But the next week, I'm
That's
okay.
code for I'm going to be drunk early Friday.
Okay.
But seriously, pick a Friday, and I'll be there.
Okay, buddy.
Okay.
I'm wondering if Raksha is here. I don't see her. If you do, can you put something in chat, Raksha, or it's interview time? So I typed your name in, and oh, there you are. Okay, we're good to go.
All right.
So
and you guys have a great one. Have a great interview. Thanks everybody for tuning in with us today, and stick around for Dale's interview. So thanks, guys.
Thank you, Blake.
Good
Thank
luck
you, Dale.
today, Blake, Stel.
Thanks everybody. I'll see you on the daily roundup webinar for ForexAnalytix subscribers. I'll see you guys in 4 hours. Thanks.
Okay, Raksha, where are you? Okay. Welcome back, my trading warrior sister.
Hey, hi Dale, how are you?
How are you? You're so busy changing your icons on Twitter.
I'm getting bored, so
you have multiple you have
can't change the
multiple
face.
sides to yourself, you know. I just, every week I'm wondering what will she be wearing now. Anyway.
That is interesting you, I think.
All right, so do you remember how to share the screen with the green box that says share screen?
But still, let me just one moment.
And I call Boomi your crystal ball. So it is, isn't it?
Yes, it is. Indeed it is.
Okay.
I am very bad at sharing screen.
You got it. No, all right. Well, that's a different look. I haven't seen this from you before with the green and the pink lines here.
Green and red is the Boomi. This is the crystal ball which we are using.
Oh, okay. All right. So here we are knocking on the door of new highs. Still looks like you're on a buy. I mean,
yes,
when you're making new highs, how can you not be on a buy?
Yes, we are still high, and we have just touched the last high. The last highest high was around February. So now what we see from here is, as it is touching this back again, this zone is again the important one here. This zone will be like, again, the make and break thing. But what I am looking for is a retest back from this zone, back to the levels of 3340 and 3385, around that price. I'll just move down to the lower side, like the July high. If I be precise, like this July high. So I will be looking for a retest back to this level first.
3277-ish?
3277, and one more level was there. I don't know why my drawings are all messed up, because I remember I have updated the chart, but right. So 3337 and 3277. So these two are the major pivots here. The support for further any kind of bullish invalidation, if you can say. So these.
What's the first one? 3337?
Yes, the first one is 3337.
Okay, got you.
Okay, so at least like till I'm sure that it will be testing this level for sure before going further high. And if I remember, as per my calculation, it was around 3463 around. So
okay, so that's your eventual target is 3463.
Yes, 3463, around like this, around this price. So it's not precise. Let me do it 3463 for you.
How did you come up with that number? Is it a fib extension or something?
The extensions, yes, extensions, and some GAN levels also, the breakout levels also. So, and still, as you can see, as per Boomi here, again, it's still in the demand zone. So that is one more reason that as it's this white zone, which you see, and no green and no reds, this is the zone of the correction part. So for in between this correction, I'm looking that it might be testing the support back again around this. The last high, if you can see, as per the price action, if you see, the last high here.
Okay.
So that is the price I derived from. That is the 3337 here for SPX.
Okay. So a practical way of using Boomi is if you want to go counter trend, you wait for Boomi to go neutral into white.
Yes.
And when you're in green, you should be buying dips. When you're in red, you should be selling rallies. And when you're in neutral, you could probably just trade either side, but be open to corrections.
No, we don't trade in neutral.
Oh, you don't trade it.
Yeah.
Okay.
We don't trade in neutral
I
until unless it has it has given us some kind of exit strategy. Then we exit it. Otherwise, we either continue our the last trade which we have already in, like here. For example, it has given a buy here. So until unless it's not giving me the stars here, you can see these are the trend stars here. So until unless it hasn't given me any star that okay, this is going to be a downtrend again back for some time. Till the time I'll be holding my buys.
Okay.
Between the zones, these zones, but I won't enter any fresh trade in these zone, the white zone.
Okay.
The fresh trades will only be in the green or the red. So that is the main basic guideline for what Boomi is about.
Okay.
So
you don't always have to be in.
Yeah,
there's
so
a time to do nothing, right?
Yes, exactly. You just have to watch at that time, or take some profits out. If you have taken the lots, take the profits from the half of the lot and keep the half running.
Okay.
Like that. So I'll just hidden the Boomi for some time. So let's talk only technicals first for a few time, and I'll come back to Boomi back again.
Okay.
So here I think I have opened a wrong window. Wait.
You have oil up there.
Yes, here it is. Okay.
Okay, the dollar.
Dollar, yes. Remember last time we said that from 96 around this major support, I was looking for a downside. Otherwise, it will make a double bottom here. But as it has gone, it has broken the support and is going. It's brutally broken 2019 low and 1990 high here. It's going to test 2016 low. That comes near about 91, 92 precisely. So now
why is that red circle there in advance?
This is the target circle. This is just a drawing. It's just a target circle. I'm looking for this level to be tested next.
Okay, not too far away.
Yes, not too far. So what exactly is happening here? It's a very interesting thing which is going on. I was just checking the entire scene of what dollar was doing. So it is making a little bit of harmonic pattern, if you can see here. So this was a fall, then there was a correction, and then there is a fall again. So if this harmonic pattern is going to complete itself, so what will happen is it will give us the projection of around 87. The first projection will be the 87, and the second projection of this will be 84. So it's like it's too deep here for dollar till now. And for the invalidation of this harmonic pattern, if it bounces from 91, the first sign of invalidation will be at 91, and the confirmed sign of invalidation will be at around 90. So if it bounces back, then it will jump back and it will go and test the major 2019 low and back to the major support line of 96, 97, and way back to maybe 99 back again, the 2019 high here.
So you have a 91.41 for a invalidation. It's we have a harmonic guy that has, that possibly being like a right shoulder of a head and shoulders. But so you're saying the harmonic pattern's bullish and it's not negated till it takes out the two invalidation levels of the harmonic?
No, harmonic pattern on a very long term, I mean like the lifetime of this DXY, if I was looking, it was saying it's a bearish one. So if that is so, it'll fall, that pattern completes near about at 87 to 84. So If
Okay.
to invalidate this fall, I mean, that if this is not becoming the harmonic, it's not completing that. So for the invalidation point, there are three major points here. First is the 2016 low, which we are about to, it's not too far because it's already the CMP here is 92.33 here, and 2016 low is 91.92. So it's not that far to just test this line initially. And the next two levels for invalidation of harmonic, that where this bearish viewpoint will be negated, will be 91 to 90. So these two are the levels. First is the knock of this, the first idea of invalidation of this harmonic will be at around 91.4 around, and the confirmation will be at around 90. So if the prices bounce from 90, that means it's not going to fall further till 87 and 84, too deep for that. So that is what we have for DXY here. Let's hide this one. Yeah. So this is here, I was following DXY in that manner. And the next I was having, you remember gold? We discussed gold last time. Said it's going to give you the highs of 2080, and it was around in 2000 was the price. 1800 was the first level which I was looking at gold in 18,000. Then it started, it just went here sideways here for some time, and then it just touched this level. This is the harmonic level here, the fib level here. So it has just touched this level here, and from there I was pretty sure, because this was the level where the long-term harmonic pattern finishes. So we saw a very quick fall from this level here. Now what I feel is it's still going to go down, but as 86 to 81, 1986 to 81, this is a range of support here for gold. It has rejected so many times here, and there also comes the July high. This line, this range, it comes in between the level of last month's high. So this makes a major support here for gold. So if this support is still intact and it doesn't break down, we can see back to 2015 as initially, as it is also a major resistance here. So until unless it is below that, it's still bearish. It's above 2014, it's going back to 2034 and 50 and maybe 2080, but I'm not that bullish for gold so far right now.
Okay.
But this right now I'm in a very neutral phase, because I'm waiting for a breakout of this or a bounce of this price, because it still hasn't given me a clear indication at what it wants to do right now. And if I put Boomi here right now, it is in a demand zone, but again it went back in the white zone as the neutral zone, which I said. So I will not enter any kind of trade in this zone. I'll just wait for what kind of confirmation it is giving to me. So I'll just wait for that first. So that was the goal I was looking for. I was actually following gold for this. And we, with this, we actually just wrote this beautiful.
It looks like Boomi gave a sell when you had that last chart up there around 2014.
Yes, it gave a sell, and it gave me a confirmation. See, here the harmonic pattern finishes. It gave me a confirmation with the star that, okay, the downtrend has started. And as soon as it just reached this line, I went to the lower time frames, more lower. I'll just show you where I was here. 1 hour time frame. So as soon as it gave me the sell here, we just sold gold here.
Nice.
So this was the trade we actually took, and many of our subscribers took this trade, and they're so happy with that. So this was the one, the gold which we were looking since a long time, and one I was following was crude. So crude is behaving very crude right now. It's not good. Not in a trading opportunity, if you can see. See, I was expecting it will fall till 40, but it has just rejected 1990 high very abruptly, and now it's going in the range way. It has also rejected my June high here. It just went back and it's just rejected my June high, and now if I these lines are my last week's support and resistance ranges. So it is still going on between the last week's range itself. So until unless either it breaks the high of my last week, I won't be buying anything. And until unless it doesn't breaks down this this zone, the dotted line here, like it has started, started giving me a breakout here. So my target for this for a very short term trade will be 42.30 around this price. So this will be my short side for crude. No long term view for crude so far, but as I was looking here again, I wherever I look, I just see the harmonic ones. I don't know why I just only see harmonics here. So if we go as per that, then we can see a more of a higher side back to 50 in crude in longer term, if we say. And also here also averages fib 50 here, 53.75. So 50% of the retracement of that harmonic pattern comes and falls at 53 here for me. So for a very long term, I am looking back to 43 and then back to 53 in crude.
Okay.
So this is only thing which I have with me right now. Not much more than that. I'm just looking. I'm just observing Nifty nowadays. So many ups and downs are going on, right? So that's the only reason I'm just looking only for Nifty and these pairs here. So this is all I have in my bag this time for the trading purpose.
Okay.
Yeah.
So the gold was directional both ways. A lot of chop and everything else that you're talking about. The dollar was pretty directional.
Yes, dollar is very
downside.
pretty. Yes.
And
yes.
S&Ps, your ultimate target, is that a harmonic target up there, 3460 for possible top?
Yes.
Okay. And,
but before that, it will touch 38. See, here's my. I was I was using the wrong window, I think. So here's that. This around 86 to 84, this range is the support range and it is already being tested now back. If this range is broken, max to max, I think it will test the 76, 75 range of here. And from here, if these two ranges of support will act as a bearish invalidation point for me. So that first bearish invalidation, I mean, the hint of that will be around below 72. And we can see starting of this at around 33.55. Below that, we can see.
Well, that's my 2-week off number this week, 33.55.
So
that you see, all the memory in the market is to the left, right, Raksha? So, you know, what I do is I, just count back 2 weekly candles. And if you do that from this week, 3355 is a big number. Closing underneath it would be pretty bearish. So
yes, it will be.
Yeah.
And if that breaks, then we can find some support at around 32.87 for some time, because it's a very
look at all those gaps underneath there too,
yes, it's gaps, and then and it never allowed, the bulls never allowed to fill that gap.
Right.
Tried so many times, but it never done that. A very swift rejection at this level. So we can find the support back at 32.87 if these levels are broken. But
okay, I have a couple questions from attendees. Do you use Boomi on platinum?
Yes, of course.
Okay, so there you go, Amira.
Wait.
And you also have a big fan here, Dennis Mwanga. Hi, Rex. Big fan. Thanks for sharing your methodology. So how do you apply Boomi on FX? So there's platinum. So you could apply it to any market, right?
Yes, of course. It's universal.
Okay.
You can apply it in indices, NASDAQ. You can apply it on COMEX, FX pairs.
Right.
Everything.
Okay.
So this is how we have platinum with Boomi. So
neutral.
Right now, yes, it's neutral. Right now, it's in it's a correction phase right now, if we can see right here. But still bullish, because I didn't see any trend star here, the star of red star here, to show me that it is going to fall or it's going to have some kind of bearish move here. So right now, there's nothing bearish in this, in platinum. If I jump to a smaller time frame, it has given me a sell here. So my target will be, I'll just wait until unless I either get a green zone or I get a green star. So that will be my target for this short trade here. But on a longer term, if I go for that, it's still in here in a 4 hour also it started the red zone. So, but on a longer term, it has in a correction, and then we can see here it's in a sideways zone. But if we go for a 4 hour, it has given a sell, but still not pretty much confirmation of the star, because I didn't see a star here also in 4 hours. In 4 hours also there is no red star. So this is not a perfect sell as per our guidelines. We will not sell in this label here. So here, if you ask about platinum, what I feel about platinum is it is still in a correction, but not in a bearish mode so far.
Okay.
So it might go back and test the 2006 high, 2006 low that comes exactly at around 967. So it might go back and test that. But if we're looking for the support, the support will be at around 930, 9 to 9.809 if you see precisely, but 930, keep it like that.
Okay,
So
I'm getting a request for NASDAQ. Do you have the NASDAQ for some levels?
Just a second.
And
I'm not actually following NASDAQ.
Okay, that's okay.
But still,
so Dennis,
let me give you an idea about what is going on.
Raksha said you can use it on FX.
Yes,
you can use it on everything.
On FX also, I can show you how it looks like, because I have Euro USD here on FX. So here was that FX. There was a buy here.
Yeah.
Few of our FX subscribers have bought this, and we are actually tracking this for them, and we are along with that, we're giving them the levels also, the levels which I actually prepare the chart. So I keep on giving the levels also, those who are interested in that. So here is a buy. It gave me a star here. So I exit here practically. Then again it gave me a buy again, and still it still is in a buy zone. I mean, it still is in a buy continuation of that trade.
Are there any harmonic targets above the market?
Sorry, I didn't get it. Can you please repeat that?
Oh, do you have any harmonic targets above where we are in Euro?
Of USD?
You know, like the S&P, you had a target that we haven't seen yet. So I was wondering if you have something.
Yes, it is. Yes, it is. I was not looking before, but now as I jump to weekly, so this is one around, yes, 26 around 0.112085.
Wow. Okay.
So this can be, yes, this can be the one here, the first one, the harmonic. Okay. And if I'll just use the extension here, and I'll just check where this wave ends. So it's way up than that. It's 28257. This wave ends at 28257. So it can be till that price.
Wow.
But I don't think so. It'll go that high. This invalidation of this harmonic will be around at 50% of this retracement, around at 1.21730, the first one. So it can just reject from this level for sure. So let's see. I'm not prepared for the harmonic move here, but
that's okay.
I can see some harmonic move going on here right now.
Okay.
Yeah.
Anything else you wanted to show? If not, why don't you tell people how they could get in touch with you and subscribe and work with Boomi? Oh, I spelled it wrong on Twitter. Okay.
The main meaning is important. There's nothing wrong in that. Okay, so this is my ID. You can find me at Raksha, RAKZ at 27. And
look at that, you're a superhero. Wonder
I am Marvel
Woman.
fan. Yes, I am a Marvel fan. With these levels, actually, I feel like it's better not to show my face. Sometimes it's better to be like a
You're
superhero.
anonymous now. Okay. Yeah. All right. Well,
And
now I know you're a veteran of the retail business. Now that you're hiding behind something. So, okay. There you go. There's
so
Raksha's
this is a
website.
website, and every information about what versions which we have is all there on this website and niftyanalysis.in. On the pricing, if you check, there all the versions are here. What market we actually cover, indices, FX, COMEX. This option levels are for Indians, Nifty 50 stock traders. And then we have the latest one we have is NASDAQ. And there are a few more updates which we actually have done on that, about the levels and the supporting levels for what you can say is the absolute levels which we call for. And what these levels helps you is to, it gives you the entry, exit, and along with that, it gives you the take profits also. So it's easy for you to understand whether you should enter the trade or you should not enter the trade, because I always keeps on repeating, not trading is equivalently important of trading, because if you fall in a wrong trade, your entire capital is going to vanish. So
Can
saving your
I?
equity is like making your equity always.
Okay. If
Yeah.
you could just show that one more time where it has a pay now button. What
Yeah,
you could
sure.
do is say pay now or pay the market
See,
later.
I think I have done
How
something.
about that? Pay
Just a
now
second.
or pay later, the market. So, Raksha, want to thank you.
Thank you so much, Dale, for always
Congratulations on
just
catching that gold bust. That was
thank
one
you.
of the trades of the quarter.
Thank
And
you.
we'll have you back in the fall, maybe right after the U.S. elections, and see what things are popping up for you then. And you're a real pro. And
Thank you so much, Dale.
I'm so glad that I reached out to you on Twitter, well, a couple years ago now. So appreciate you coming in and sharing your work with us on Face.
It's always you, what you say, in Hindi we say it's my pleasure. I feel very good to always meet you and talk to you, because you're such a great host, you're such a great person, and God bless you, and thank you so much for calling me here again and again, and just and tolerating me and my messy chats always. Thank you so much, Dale.
You're a courageous warrior, my trading warrior sister. So I appreciate it. Everyone's saying thank you to you, Raksha. Good luck until we speak again, and may you and your loved ones remain untouched from you know
Thanks,
what.
Dale.
Okay.
Thanks,
All right.
Dale.
So that's a wrap, everyone. We'll see you tomorrow. And remember, whether you're using Boomi or moving averages or momentum, don't just count your pips, count your blessings. You're welcome, Skip, and we'll see everyone tomorrow. Thank you, Raksha.
Thanks, Dale. Bye-bye.